The last index we're going to talk about is the Russell. Now, the symbol here for Vantage is US2000. So when you're using your Vantage account, you can just search up US2000 and you'll be able to find this CFD. Now, here's the thing that you got to understand about the Russell. The Russell is the small cap index, and small cap is going to represent, smaller companies. And so when we're talking about smaller companies, there are some obvious right off the bat risks to rewards with this. When you're talking about smaller companies, they have more opportunity for growth, but they also have some headwinds because they're smaller. When you're a ginormous company and you have all the resources in the world to raise money or to throw money at a project, you have more resources on your side. But again, there may not be as much growth or upside in the future. Small cap companies have a unique ability to grow very, very quickly in an expansion period in the economy. And we'll talk about some fundamental components that we'll need in order to understand this. But what you need about the basic understanding of the Russell or the small cap index is you're looking for periods of high growth. This is the spot to be in because during these times you see massive jumps. A very easy reference we can talk about is, talking about the post-COVID era. Take a look at the growth that the Russell experienced, up 100% from April of 2020 to the peak here in March of 2021. That is a massive, near doubling in just a year, which is an impressive growth. But again, with that added growth potential, you also have higher risks because interest rate environments, you could see here's the Russell from peak to trough. We had a really nasty drawdown of 33.25%. And this index is not even very concentrated in technology. In fact, it has a lot of finance companies. It's just that these companies are smaller. And so when you get a smaller based index, they're more susceptible to borrowing costs, interest rates, inflation, the economy, etc.